Wall Street experts warn about technical signals suggesting market turbulence with mega caps diverging and Treasury yields on edge. Could a pullback actually set up the next bull run? So discover whether the coming months will bring pain or present investors with prime buying opportunities.
Rated a little bit just in the past few weeks or so. So maybe some success on the short side with that, but really not on a broad basis.
Yeah, because that's what I was leading to, is you never should do that yet. What about the VIX? You point out that it still hasn't done anything, but it's moved above some technical long-term, MACD?
If you look, it's been stabilizing and now is inching above its 50-day moving average. If it were to also clear its 200-day moving average, that's at 19.3.
So it's 16 and change today.
Right? It could happen in a day, though, right? So if it clears that resistance area, that would be a good risk indicator for the S&P 500. So we continue to watch the 20-day moving average as our primary trend following input, which has been one of the best gauges since the April low because it's eliminated all the noise. And the noise has only been with us usually for 2-3 days at a time. So that 20-day has been very valuable, albeit a very simple tool.
I mean, Nvidia has taken at least, I don't know if it's the only leader, but it is a leader in the market. It hasn't acted well after that news, the last couple of sessions.
So the mega caps have certainly diverged. Microsoft, Nvidia not doing great, but we have huge gains from Tesla, from Alphabet. So they've sort of balanced each other out as a complex, and they're in the contribution, I guess, to the major indices has still been fine. If we lose the support of the other mega caps, especially Alphabet, I think that would be detrimental to the major indices. But listen, I mean, we've avoided the seasonal pullback so far.
Will we avoid it?
I think not, probably, but we don't have the indications yet.
Something between now and mid-October we will see?
That's very natural. Usually you see it towards the end of September. And wouldn't that be a great reset for the market? I mean, if you look around, especially in the AI names, it's extremely overextended in its appearance. Overbought's not a bad thing. That's a reflection of momentum. It's when you see that overbought reading give way to downturns, and you can simply follow that using stochastics or RSIs, and you'll see it on a broad basis, I think.
Intel, I mentioned it. I don't know if you follow it, but what does it signal? $40 now?
You know, I'm very keen on counter-trend setups, and Intel had this prolonged basing phase in place, obviously gapped out of that base, and now has, I think, more upside. It's a confirmed breakout at this time. The initial resistance is kind of in line. Secondary resistance gets you up to 38 or 39. I'm not sure where it is today.
32.54.
Yeah. Okay, so it would be nice upside follow through. That would be a longer-term objective. But even still, I like Intel because it provides almost technical diversity to a portfolio that generally looks a whole lot more like Palantir.
Yeah, gold's grinding higher while yields are going up. I guess that kind of makes sense. But I made the point that yields long-term are still pretty low, and gold's almost at 4,000. So there's sort of
and the dollar is just kind of finding a footing in here. So it feels almost like we're on the brink of something to me, because the Treasury yields, looking at the 10-year, and also the dollar index are very close to key support on their charts. If we saw the 10-year yields take out about 4%, the next support is 367, but the breakdown would actually target about 322 if you reference support.
You said it was better for yields. I thought you said it got back to 412.
It did hold the support. Yeah. And if you zoom out, there's a long-term triangle formation, so a breakdown would be a big deal. The indicators on the monthly chart point lower, but on the short term, they still point higher.
That's exactly what the administration wants to have happen, to bring down the 10-year mortgage, the 10-year, so you can get mortgage rates lower. They're tied to that, too. Would that be an indication of, OK, we can take this, it's a good thing, maybe good things for the economy, or are people going to panic if that happens?
Well, I think a little pain maybe first, right? And then finally it will actually end up being good. And that's often the case, honestly, when you see these rate cut cycles, getting started, where there's an initial reaction to the downside, but then ultimately it does have a positive impact.
You always talk about when Bitcoin makes a big move, which it did. It's in an uptrend, but it has some pretty violent, it can go down 111 today. So in the last week, it hasn't been great. you said support is what, 108 and then 103 or something?
You know, we moved to a bearish short-term bias this week in our research for Bitcoin just to respect a short-term overbought downturn. But it's within the context of an intermediate-term range that follows a long-term breakout. So we want to be bullish long-term, just out there looking for a better entry point.
Is 103 a better entry point?
You know, 108 is
108
about,
you would do?
that's the former resistance. I'd love to see it hold there. There are some indications that it might be penetrated. And then the 200-day moving average comes into play.
What's that?
That's, I think, around 103, as you mentioned. So if we were to see Bitcoin come down there and start to see stabilization, upturns in those same indicators, that would be our cue to get back in.